Dear friends, welcome to weekly view on markets. Nifty gained around 0.82% during this week. Broader markets outperformed and were up by 1.52%. India week share dropped below 10. It is one of the lowest levels in recent times, indicating low volatility in the markets. Most of the sectors ended in the green and there was all around buying. DIIs continue to buy and FIIs have reduced their selling. And FIIs were net buyers on 3 days of this week. In future, by looking at the trend, the FIIs may start buying. Technical charts are in the uptrend and indicate that market may continue to go up in the coming week also. Global developments create a headwind for the markets as there is fresh news on tariff, H1B visa, and also on the developing war situation in Israel and Russia Ukraine. Lower GST rates come into effect from 22nd September, and lower GST rates and lower interest rates by RBI in India is likely to boost demand in the economy in the coming months. Corporate earnings recovery is expected in next 3 to 6 months, that is within 2 quarters. Markets may go up in expectation of recovery in the corporate earnings. It is good time to invest now in good quality stocks and good mutual funds. Existing investors should hold on to their investment as the earning recovery is around the corner and market has corrected almost for 1 year, and now the next leg of rally is expected to start. Now let us look at performance of indices. Nifty closed at 25,327 with a gain of 213 points, that is for 0.85%. So Nifty holding above 25,000 is a good technical indicator. Bank Nifty closed at 55,458 with a gain of 649 points, that is 1.19%. Mid cap index has gone up by 867 points and it has recorded a gain of 1.49%, closed at 59,094. Small cap index also went up by 514 points, that is 2.86%, and small cap index closed at 18,504. So there was all around buying, all the indices have gone up, broader markets have outperformed, and market volatility that is indicated by India VIX is at 9.96. Now let us look at performance of various sectors. Most of the sectors ended in the green. PSU banks recorded the most with 4.83% gain. Realty sector gained around 4.43%. Defense sector recorded 3.41% gain. That means all defense stocks have gone up during the week. Energy, public sector companies, oil and gas sector all gained between 2 to 3%. Infrastructure sector, commodities, pharma sector, manufacturing sector, auto sector, information technology, metals all gained between 1 to 2%. Media, consumer durables, and FMCG were the three sectors which were marginally in the negative. Now let us look at technical charts. This is the chart of Nifty index. It is a daily chart. Here we can see Nifty index has gone above this resistance line. It has crossed resistance of 25,200 and it has closed above this line. So it is a positive indicator. And the Nifty chart has been making higher tops, higher bottoms. And if this trend continues, Nifty is likely to go up and it may touch the previous high of 25,648. This is a chart of Nifty Mid Cap Index. Nifty Mid Cap Index is within the broader range. That is, you can see the support line and resistance line. It has to cross this resistance level of 59,900. After that, we will see a bigger rally in Nifty Mid Cap Index. And I believe that this rally is going to coincide with the improvement in the earnings of the company. This is the chart of Nifty Small Cap Index. Small Cap Index is also within the broader range. Now it is trending towards the higher end of the range. The resistance is at around 19,000. Small cap index has to cross this resistance. Then we will see a good further uptrend in the small cap index. This is the chart of Bank Nifty index. Bank Nifty index is also within the broader range. It has recovered from the support zone of around 54,000 and now we are somewhere in the mid of this range and it has to take out the resistance at 57,000. Then we'll see a good rally in Bank Nifty. Now let us look at some of the macroeconomic fundamentals. India's macroeconomic fundamentals continues to remain quite good. RBI forex reserves has crossed 700 billion US dollars. It is at 702.96 billion US dollars. It is up by 4.69 billion US dollars during this week. This is a quite good reserve position with the RBI. Forex rate is at 88.09 rupees per dollar and dollar index is at 97.57. A steady dollar rupee rate is good for the economy. For past several weeks we have seen rupee staying at around 88 to 88.5 level. A steady exchange rate is good for the export oriented and also import. Brent crude price is $66.68 per barrel. The crude price also is remaining between 65 and 70. That is good. Gold price is at almost around at all-time high. It is at 1,04,440 for 10 grams 24 carat. There is a demand for gold as most of the central banks, including RBI, are buying gold. They are stocking up uh, gold. FIIs have sold 1,327 crore in equity during this week. Against it, DIIs have bought 11,177 crore in equity during this week. FII selling has reduced. On 3 days of this week, FIIs have bought around 300 to 400 crore. So, what I expect is going further, FIIs may start buying in Indian market. New GST rates is coming into effect from 22nd, that is from Monday, and it is expected to give boost to the demand in the economy. Trump has imposed $1 lakh fees for H-1B visa. 70% of H-1B visa is held by Indian people. So this is going to have a impact on people who wants to migrate to India for jobs fees. Indian team headed by Commerce Minister will visit US for trade talks next week, and the trade talks are likely to be concluded in coming months, and then there will be a certainty around the trade tariff that will be good for the import and export business people. We have looked at the charts; they show uptrend with higher tops, higher bottoms, but upside in the market is limited due to the high valuation of the stocks and lower earnings, and also the global geopolitical developments create a headwind for Indian markets. If there is a earning recovery, definitely our markets will scale higher levels. And generally, we have seen that before the earning recovery actually happens, the market will tend to go up in expectations of the good earnings. Market always discount future earnings and go up before actual earning recovery happens. So taking this into consideration and also looking at the technical charts, it is good time to invest and be remain invested. And markets may go up, they may go up in next quarter, or they may take some more time. But definitely, when the earning recovery happens and the global trade tariff issues and global headwinds subside, definitely our markets will go to higher levels. And we have seen 1 year of correction technically, and that is also going to support the markets. So it is good time to invest as earnings are likely to pick up in next 3 to 6 months time. Markets may go up earlier in expectation of earnings recovery. So that is why investors are advised to remain invested. Mutual fund investors should continue their SIPs and we remain invested. So there is more money to be made from the markets in the long term. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions, which I will reply. We'll meet again next week. Thank you.